When it comes to crypto assets, tax can be a complex topic. So today we're going to talk about 3 of the main things you need to know about your crypto when it comes to tax time. We'll also be hearing insights from Shane Brunette and Harrison Dell from Crypto Tax Calculator, who are sponsoring this video. Crypto Tax Calculator is an Australian-made software that's been built from the ground up to suit ATO crypto tax guidance. It can handle on-chain transactions and smart contract interactions, so there's no problem accounting for DeFi and NFTs either. And if you sign up before October 31, you can also get 20% off all Crypto Tax Calculator plans by using the code FINDER20. So let's get talking about crypto and tax. First things first, when you're reporting your crypto assets to the ATO, you need to make sure you're reporting them accurately. And it's not just the assets themselves either, it's also about the transactions that have taken place with them too. But this can all be pretty complex, so many investors opt to use a specialized calculator service rather than managing a spreadsheet or paper records.
I think if you're going out there thinking about crypto tax, thinking about how to do your taxes, you've got to be going to a software solution. Like, it's just too hard to be doing it manually.
It's important to remember that the ATO can and does keep an eye on crypto trading.
All the exchanges in Australia are under notices to provide the ATO with information about your activities. They have to do that by law. Whether the ATO uses that or not, we don't really know yet. We've seen some audits start. The ATO has it in their sights.
So always make sure that you're providing the right information on your tax return.
Do I pay a lot of tax or do I pay no tax on this transaction? Especially if you've had Bitcoin for a long time. It's a very serious question. This isn't a few dollars and cents. I've seen hundreds of thousands, millions of dollars.
If you own crypto or NFTs, capital gains tax is the main type of tax you'll have to deal with. So how does capital gains tax work? Well, in its simplest terms, when you sell crypto, you'll usually make a loss or a gain. And if you've made any gains, you'll need to report them for the purpose of determining your capital gains tax.
A lot of people think, tax, it's just something that when you cash out of the crypto system, that's what's going to be taxable. And that's not actually the case. When you're actually trading crypto to crypto, that can be a taxable event. And when you're pulling money straight into fiat, that's also a taxable event. So you've really got to think about all the transactions that you're doing in the crypto ecosystem and not just like one particular type of transaction, such as the money getting pulled out into your bank account.
However, if you've held an asset for more than 12 months, you might be eligible for a discount on this tax. This is to discourage flippers and to encourage long-term investing. So what if you sold crypto for a loss? Well, you may be able to claim the loss as a discount against next year's tax. And that leads us to our next point, dealing with losses. When it comes to losses, there are a couple of considerations. Trading losses offset your profits. Your taxable investment gains are always your profits, minus your losses. And if you're an individual trader, this means that your trading losses will offset your capital gains tax, either this year or for a future tax year.
You can't offset that capital loss against your income. You can only offset it against, this year's current capital gains or future capital gains.
But if you're a professional trader, you may also be able to claim against your losses. This is because your losses are considered as part of your operating costs of your business. However, whether you're a regular investor or a professional trader, losses can only offset tax if you've actually sold or exchanged an asset. Assets declining in value since last financial year aren't considered the same thing as a loss by the ATO. And that's us done for today. Just be aware that rules around crypto and tax in Australia are always evolving. So while this information is current at the time of filming, it's worth talking to the professionals for the most up-to-date information. And if you're looking for more information about how to manage tax with crypto, make sure to visit finder.com.au. You'll find plenty of useful info right there.